G'day, mates! Welcome to another exciting episode of Finantax Clips. We're your trusty guide through the thrilling twists and turns of the finance world. In today's riveting journey, we're talking about those heart-wrenching what-ifs. Yes, we're delving into the realm of missed investment opportunities that could have catapulted you into the billionaire league. Imagine the Bitcoin boom, the Amazon upswing, or the Apple surge, all slipping through your fingers. Intrigued? So without further ado, prepare to dive into the world of unforeseen regrets. Picture this. The year is 2010, and you come across this new digital currency called Bitcoin. This digital currency, unlike anything you've known before, is decentralized, with no government or financial institution calling the shots. It's a bit tricky to wrap your head around, but being the curious soul that you are, you decide to dig a little deeper. You learn about this mysterious individual or group known as Satoshi Nakamoto, who introduced Bitcoin to the world. You read the white paper, and while some of it goes over your head, you grasp the basic concept. It's a peer-to-peer electronic cash system that could redefine the way we think about money. You ponder, you contemplate, and then you decide to take the plunge. You invest a modest sum of $100 in Bitcoin. It seems like a lot for a bunch of digital coins, but you have a hunch this could be big. Fast forward to today. What seemed like a risky bet a decade ago has become one of the most lucrative investments of the century. Bitcoin, from being worth just a few cents in 2010, skyrocketed to an all-time high of over $60,000 in 2021. Let's do some quick math. If you had bought Bitcoin with your $100 in 2010, when it was worth just a few cents, you would have been able to buy approximately 20,000 Bitcoins. If you held onto those coins until 2021, when Bitcoin hit its all-time high, your initial $100 investment would have grown to a staggering $1.2 billion. Yes, you heard that right. The investment you made with $100 could have turned you into a billionaire. That's the power of Bitcoin and the potential of cryptocurrency. But remember, hindsight is always 20/20. Back in 2010, Bitcoin was a risky, unproven venture. Many people were skeptical, and understandably so. However, those who took the risk and held on to their coins are reaping the rewards today. So, had you invested just $100 in Bitcoin back then, you'd be sitting on a fortune today. Now, let's take a journey back to the late 90s. The dot-com bubble is in full swing, and there's a new online bookstore called Amazon. Back then, Amazon was just a fledgling company trying to navigate the wild west of the internet. In 1997, Amazon went public, launching its initial public offering at a mere $18 per share. If you were savvy enough, or perhaps just lucky, to invest $1,000 in Amazon at that time, you would have bought roughly 55 shares. But here's where the story becomes interesting. Amazon's stock has split 3 times since its initial public offering. First, in 1998, it split 2 for 1. Then, in 1999, it split 3 for 1, and later that year, it split 2 for 1 again. So if you'd held on to those 55 shares, after the first split, you would have had 110 shares. After the second split, 330 shares. And after the final split, a whopping 660 shares. Now, fast forward to the present day. As of today, Amazon's shares are worth over $3,000 each. If you'd held on to those initial 660 shares, your $1,000 investment would be worth close to $2 million today. But let's take this a step further. What if you'd been more ambitious and invested $10,000 in Amazon's initial public offering? Well, today, you'd be sitting on a fortune worth close to $20 million. It's easy to look back with hindsight and see the missed opportunities. But back in the late 90s, investing in an online bookstore was a risky move. Many dot-com companies burst with the bubble, and their investors were left with nothing. But Amazon, as we all know, survived and thrived. And just like that, a missed opportunity with Amazon could have made you a millionaire, if not a billionaire. It's a reminder that the world of investment is filled with risks and rewards. And sometimes, the biggest risk can lead to the greatest reward. Rewind even further to the late 70s. A new tech company named Apple is making waves. This was a time when floppy disks were the height of technology, and the idea of a personal computer in every home was still a far-off dream. But in a small garage in California, Steve Jobs and Steve Wozniak were about to change the world. In the early days, Apple was just a scrappy startup operating on a shoestring budget. The duo was working tirelessly to create something that, at the time, seemed almost impossible: a user-friendly personal computer. Their hard work and innovation led to the creation of the Apple I, a computer that was as revolutionary as it was risky. Fast forward to December 14, 1980, the day Apple went public. The initial public offering price was $22 per share. If you had the foresight to invest $1,000 in Apple at its IPO, that investment would be worth millions today. But it wasn't all smooth sailing. Apple had its share of ups and downs. There were product flops, executive shakeups, and intense competition. Yet, through it all, Apple continued to innovate and push the boundaries of what technology could do. They introduced the iPod, the iPhone, and the iPad, products that not only transformed Apple, but the entire tech industry. The journey of Apple from a garage startup to a tech behemoth is a testament to the power of innovation and resilience. It's a reminder that a small idea can grow into something that changes the world. And it's a lesson in the potential rewards of investing in such transformative ideas early on. Today, Apple is one of the most valuable companies in the world, with a market capitalization of over $2 trillion. It's a tech giant that has fundamentally changed the way we live, work, and communicate. So, overlooking Apple's potential back then could have cost you a fortune today. These stories might make us feel regretful, but they are powerful lessons for future investments. Disappointment and regret are often our first reactions when we look back at these missed opportunities. However, it's essential to shift our perspective and view these as lessons learned for the future. In every missed opportunity, there's a valuable lesson hidden, a stepping stone towards making better investment decisions. The first lesson we should take away from these stories is the importance of doing thorough research. Before jumping into any investment, it's crucial to understand the industry, the company or asset, and the potential risks involved. The world of investing is not a lottery, and luck plays a much smaller role than we might think. Informed decisions are the key to success. The second lesson is about taking calculated risks. While the idea of investing in a new and unknown entity might seem daunting, it's essential to remember that every successful investor has taken risks at some point. However, these risks should be calculated, not reckless. A balanced portfolio, spread across various assets and sectors, can help mitigate potential losses and maximize gains. The third lesson underscores the importance of patience. Investing is not a get-rich-quick scheme. It requires time and patience. The stories of Bitcoin, Amazon, and Apple remind us that investments can take years, even decades, to reach their full potential. Patience is not just about waiting, but also about having the fortitude to hold on to an investment, even during turbulent times. Lastly, it's important not to let regret hold us back. Missed opportunities are a part of life, and more importantly, a part of investing. They teach us, shape our strategies, and make us better investors. It's essential to learn from our past, but not let it dictate our future. In the end, the world of investing is full of potential. It's about finding the right opportunities, taking calculated risks, and having the patience to see them through. And when we do miss out, it's about learning from these experiences and using them to shape our future investment decisions. Remember, every missed opportunity is a lesson learned for the future. Now, let's shift our focus to the future. What could be the next big investment opportunity? Gazing into the crystal ball of financial forecasts, several sectors stand out as potential gold mines. First up, let's talk about clean energy. With the world grappling with the effects of climate change, countries are pushing hard to transition from fossil fuels to renewable energy sources. This sector is poised for explosive growth, and companies pioneering innovative solutions in solar, wind, and other renewable technologies could be tomorrow's titans of industry. Next on the radar is artificial intelligence, or AI. It's no secret that AI is revolutionizing industries across the board. From self-driving cars to personalized marketing, the applications are endless. Companies leading the charge in AI development represent a potential bonanza for early investors. Just imagine if you had the chance to invest in the internet in the early 90s. That's the kind of opportunity we're talking about here. But it's not just about looking at sectors. It's also about identifying the companies within these sectors that have the potential to disrupt the status quo. That's where biotechnology comes into play. This field is making strides in areas like gene editing, personalized medicine, and even synthetic food production. Companies that are pushing the boundaries in these areas could very well be the Amazons and Apples of tomorrow. Remember, the key to capitalizing on these opportunities is to stay informed. Keep up to date with the latest industry trends, understand what drives these markets, and keep an eye on the movers and shakers within these sectors. Investing is a bit like surfing. You need to spot the wave far out at sea, position yourself correctly, and paddle hard when the time is right. And if you can do that, you may just find yourself riding the crest of a financial wave that could lead to substantial returns. So, keep your eyes open, do your homework, and who knows, you might just catch the next big wave. We've journeyed through time, seen missed opportunities, and looked into the future. But what's the key takeaway here? It's that successful investing requires diligent research, patience, and calculated risk-taking. Missed opportunities like Bitcoin, Amazon, or Apple remind us that fortunes can be made or missed. But remember, it's never about chasing the next big thing, but rather making informed decisions based on sound investment principles. So as we wrap up, remember to subscribe, hit the like button, and share this video with your friends. Until next time, keep investing smartly. Cheers, mates!